Good afternoon, everyone, and welcome to day 3 of the 2021 Red Cloud Pre-PDAC Mining Conference. Our next presenters here represent two different but equally compelling Ecuadorian gold development opportunities, those being both Lumina Gold and Luminex Resources. Presenting today will be Marshall Koval, who is the President and CEO of Lumina Gold, as well as the CEO of Luminex Resources, as well as Scott Hicks, who is the Vice President of Corporate Development and Communications for both companies. Marshall, Scott, welcome to the conference. It's great to have you here. And with that, Marshall, I will turn the presentation over to you to tell us more about both Lumina Gold and Luminex Resources.
Thanks a lot, Scott. Yeah, Lumina Gold, we're advancing the largest primary gold deposit in Ecuador. It's about 80% gold, 20% copper on revenue. So we have both metals in the mix, forward-looking statement. And then the Lumina Group track record. This was a group founded by Ross Beatty in sort of 2003. I joined in 2004, and really what the business plan of the company has been is to find high quality, large assets, drill them, add value in that way, de-risk them with engineering, and then move the projects on to somebody that would build them. These are normally large projects with high capital requirements. So the success and the track record of the group is kind of on this slide here. We raised 275 million and returned 1.6 billion to shareholders. All of that has been in the copper space with these companies, except for Anfield Gold. I was the CEO of that. That was merged into what is Equinox Gold today. And as we sit today, we have three companies, Lumina Gold, Luminex, both with assets in Ecuador, and Strategic Resources in the vanadium space with assets in Finland and Peru. So let's talk about Cangrejos specifically. As I mentioned, the largest primary gold deposit in Ecuador. We were on the path with a PFS on our Cangrejos, the main deposit, but we found a satellite deposit called Gran Bestia. So today we have about 10.4 million ounces of gold and 1.4 billion pounds of copper. Most of that sits in the Cangrejos deposit, although there's some in the indicated category at Gran Bestia as well. And we have inferred resources of 1.6 million ounces of gold and 0.8 billion pounds of copper. So Cangrejos is the top 15 gold development project. We'll kind of walk you through some of the metrics on that later. We, in 2020, excuse me, completed a PEA with 366,000 ounces of gold production a year, long mine life, 25 years, net of ASIC copper credits, $604 an ounce of gold, and robust economics. Scott, do me a favor and take over.
Yeah, for sure. So yeah, as Marshall was saying, we ran this study at $1,400 gold and $2.75 copper, and obviously we find ourselves in a place now with copper, over 40% higher, and gold 20% higher. So really an interesting value proposition at this point, especially when you look at how the companies trade it relative to those metal prices. And just kind of a bit of a segue to this slide, really, where if you go back to 2017, we had 4 million ounces in the ground, and since then we've been able to grow it to where we are now, just over 17 million ounces. So over 400% growth in the resource. Gold's up 50% during that time, and Lumina's market cap is only up 30%, inclusive of some financings we did. So, we think this is undervalued in a variety of ways, but this is kind of the most obvious way that we have to present it to people to make the case. Just where we sit, corporate snapshot today, $270 million market cap. Ross Beatty is the largest shareholder at 19.8%, and a group of about 5 or 6 Ecuadorians has about 18.6%, and then management and board of 10%. So, a really tight group of shareholders that have been supporting this for a long period of time. Cash-wise, right now we're using a facility that Ross Beatty put in place in October. It's a $5 million credit facility. And, as Marshall started out with the Lumina Group strategy, we're looking to divest this asset, and that credit facility is meant to give us time to look to sell the company just give us time to sell the company without looking to raise equity during that period. So that's our A plan for the company. You know, the plan B would be to keep progressing it as our group has done with other projects and take it to a PFS. But really the strategy of the company is to try to sell it right now.
And I think, Scott, I'm back alive here. So basically, we've gotten to the point where we understand the value proposition and we understand the scale and the nature of investment and infrastructure requirements. So, you know, we think it's an opportune time. You know, a major mid-tier that might come in and acquire this project would look at starting to do their own project design. So we're at a good point now. We've done a lot to de-risk the project. A lot of parts of it are at PFS level, so we're in a good shape there. Let me talk a little bit about Ecuador. When we entered the country in 2014 and acquired the Cangrejos project, there's been substantial progress in both the fiscal and regulatory regime. Several things have happened. They've eliminated a windfall profit tax. They've lowered the NSR royalty range. And now you can get VAT returned once you go into production. And those positive developments, coupled with the enormous potential for discovery in Ecuador geologically, now we've got a situation where two large projects have been built. Mirador is a large copper gold open pit target that Tongling Mining and China Rail have, and then Fruta del Norte, Lundin Gold, have both been put into production. And it kind of shows that you can discover, develop, finance, construct, operate in Ecuador. So that's real positive. And all these things that have happened recently in the since 2014 have brought major companies in the copper and gold space like BHP and Anglo. We have JVs with them and Luminex, and we can talk about them a bit later. Newcrest, Fortescue, et cetera. So right now, there's a real good environment for mining to move forward. There's been a presidential election. We're moving into the second round in April. Both of the candidates in the second round have come out with pro-mining statements. So we think the future for mining in Ecuador, responsible mining, will be good.
Yeah, and I mean, I would take this slide to maybe raise the point that, you know, the volatility we saw around the first round of the election with, you know, a third place candidate who didn't end up getting in, who was anti-mining, you know, that was understandable. But, you know, now that that risk has been removed, you know, I think it's a clear path for the country forward. And I know there's certain groups out there that think that, you know, perhaps Rouse, who's the leading candidate, would be negative for mining. You know, we have a very different opinion on that and think that he will actually be positive for mining longer term. But I just really wanted to make that clear because we do get a lot of questions on that.
Yeah, and Lasso too, the center-right candidate, would be the same.
Right. So maybe just talking about where we are in Ecuador, because obviously location is important. We're down in southwest Ecuador. We're in the El Oro province, which is, you know, has some small mining in it. It's a very commercialized province in Ecuador. There's lots of industry there with you know, shrimp farms and banana plantations. Our project is right by the coast, so this Porta Boulevard you see at the top of the map here, that's a deep sea port that Mirador, the other producing mine in Ecuador, aside from Lundin, is shipping their copper concentrate out of right now. So we're only 40 kilometers from that port, and we would eventually ship copper concentrate from the project out of there as well. You've got hydropower to site. It's not a high elevation project. There's paved roads to very close to the project. There's no communities on the deposit. So really, it's the best infrastructure setup you could have for a porphyry system this size along the Andes. You know, just how we frame the company right now, this is the 37th largest primary gold asset in the world by resource. So it is a very large scale asset. You know, on a grade basis, that's a question we get asked a lot. We would ask that people dig deeper than just the headline grade. You know, it is a lower grade, large project. It's on the M&I side, it's 0.73 grams per ton gold equivalent. We think of it similar to a copper porphyry project. And, you know, if you flip it into copper equivalent, it'd be about 0.5%, which would be higher grade than Cobre de Panama and Mount Milligan, both of which were just built, and a similar grade to Red Chris. So, you know, projects of this grade are getting built. And, we think because of some specific aspects of our project, we think the economics really work, which we'll talk about in a couple minutes. On the CapEx side, it's $1 billion to build the project, which is a little bit more than Fruta del Norte cost and a little bit less than Mirador. So companies are deploying this type of capital into the country to build large-scale mining projects. And as Marshall mentioned earlier, the Cangrejos pit, we took that basically in most respects to a PFS level, but in order to include the Gran Bestia pit and the inferred resources there, we updated a PEA. So, if we were to take the project to a PFS, we would have some infill drilling at Gran Bestia to do and a little bit more detailed engineering work. This is just the resource of the project. So 1.1 billion tons between indicated and inferred for the 17 million ounces of gold. We point out here that if you increase the cutoff grade you use, which is effectively what we did in the mine plan, you don't lose too much of your contained gold. So the resource is done at 0.3. In the mine plan, we used about 640 million tons of the resource. So similar to this 0.5 cutoff here. And, that was our conservative way of mine planning. We did the mine planning exercise at $1,100 an ounce. And that, tightened up the project and gave us the good economics that you see in the study today. Marshall, you want to talk a little bit about the exploration and, where this is open and an upside for potential buyers or us in the future?
Yeah, so on the right there, you can see the Cangrejos pit, and that's what's been drilled primarily, pretty much all to indicated. There's still upside there to the southwest and then at depth. And then Gran Bestia to the left, that's about split between indicated and inferred. And it's opened on the northwest and north. And there's a ridge line there, Scott, if you could point it out. That's where we stopped drilling arbitrarily. The mineralization continues over the ridge, and eventually, we would look to drill it. But we had to cut off the resource to update the PEA at some point, and we elected to do it there. And in this cross section, you can kind of see on the left here where Gran Bestia is. The mineralization continues over the ridge, and basically we feel there's quite a bit more mineralization on that direction. On the right there, you can see the cross section of the Cangrejos pit. You can see the two pits almost adjoin. There is some mineralization in between. Obviously, we need to do more work, and possibly with future work, it could turn into one pit, but we're not there yet. That work needs to be done in the future. The upside exploration potential here, point to Gran Bestia and Cangrejos there. This is, then there's a green line around those. That's a 0.2 grams per ton gold in soils. And then the geophysics anomaly from ZTEM lines up really well with it. And there's still more upside blue sky exploration around that yellow center there to the south and to the west that we haven't looked at yet. And then there's several other sites in green here that you can see that we could have future exploration. So there's still quite a bit of blue sky to this story.
So just diving into the PEA in a little bit more detail here, the $1 billion of capital would get you to about a 40,000 ton per day operation out of the gate, which would, for the first 5 years of the project, produce about 270,000 ounces a year of gold. You'd then spend about $450 million that you'd fund with cash flow to get up to the 80,000 ton per day level. And then that gets you to almost 400,000 ounces a year of production for the remaining, call it 20 years of the mine life. The grade starts out at about 0.76 and 0.14 on the copper, so almost a gram per ton equivalent in the years 1 to 5. The life of mine average is a lower, Gran Bestia is a lower grade deposit, and that comes in towards the end of the mine life. On a cost basis, when you net off the copper credits, we're at 604 an ounce of gold. It's pretty competitive. Some things driving those lower cash costs are, the low strip ratio between the two pits. So it's 1.1 to 1 strip ratio, which is pretty good for that type of project. You've got cheap hydropower in the area, and you've got cheap diesel in Ecuador. So all those things help you with these type of large scale operations. So, our 20% up case at the time was 1680 gold and 330 copper. Obviously, we're in and around there on the gold today, and well above that on the copper. That's a 22% IRR on the project and a $2.5 billion MPV when you look at that. And if you think back to our market cap at 270 Canadian versus 2.5 US, you can see it. We think that we're pretty undervalued from that perspective.
So real quick on the metallurgy, if we look at the total recoveries on the very bottom line there, Scott, it's 82% for gold and 84% for copper, 69% for silver, and 50% for molybdenum. We have 40,000 ton per day. We've included a CIL circuit, about a 4,000 ton per day circuit, and that allows us to recoup some of the saprolite and sap rock, which we had previously wasted in the previous PEA. So we'll produce about 70% of the gold in a gold copper concentrate, and then about 12% of the gold in doré. But metallurgy is good, and it's pretty standard processing technologies that we'll be using here. There's one question that came up that might as well address right here, is whether you could go potentially underground. And there is deep potential that we haven't drilled off yet. So there is potential in the future that if you make a discovery in the deeper zones later in the mine life, you may be able to potentially go underground, but no certainty there yet. Go ahead, Scott.
Yeah, so I mean, just this is the ultimate site plan here and what we were thinking. So you've got the two pits that we showed you earlier. You build a primary crusher right next to the pit at about the 80,000 ton per day level right away. You've got an overland conveyor to the plant site. And then from the plant, you'd have an overland conveyor to a dry stack tailings facility. And this approach to tailings instead of a conventional wet helps with project permitting. It helps tighten up the footprint of the project dramatically, and it helps with your water usage in the area. So, we think this is a good way to go, and we've secured a lot of the surface rates for the project in that area now, under the assumption that that's the way the mine would ultimately get built. Just moving ahead here. This really just shows how the project benchmarks across all the development projects out there that are primary gold and can produce over 250,000 ounces a year. Cangrejos is the 5th largest that's held by an independent. I think when majors and intermediates finally get around to replacing reserves, this is crucial and important. We think obviously large companies like Barrick are producing 5 million ounces a year. They're going to have to replace them at some point. So this is important for where Cangrejos sits. Just lastly, talking a little bit about valuation here on some of the Ecuador names you guys might look at. We do see a discount for Ecuador across the mining space. On a PNAV basis, it's about 30% right now. We think that over time, this should tighten up and get closer to, some of the other South American countries, whether it's a Peru or a Chile. And get closer to those Western peers over time as the existing mines continue to prove themselves, and as the government continues the trends that we've seen that are positive towards mining. I'll let Marshall talk about some of the programs that we've designed here for the community with John Yule, our corporate affairs guy, and our local team on the ground.
Yeah, I mean, there's 4 kind of cornerstones to it. It's education, environment, entrepreneurship, and health with the communities, and also employment is a critical aspect of it. But you can see we have quite a few different programs going on here. But I think the one thing that is interesting, and as bad as COVID is, that we've become closer with our local communities. We've been able to provide support where the government had limited resources in the area. We've been able to donate food, sanitation kits, protection, PPP protection, and basically we've grown closer with the communities. So it's been a cornerstone of all of our companies. Historically, we put a lot of effort into corporate social responsibility and transparency and working closely with the communities. So that's going well for us.
Yeah, so maybe just in summary before we move to Luminex, I mean, since 2018, we've drilled 40,000 meters at the project. We've doubled the size of the resource. We've improved pretty much every aspect of the PEA, whether it's mine life, IRR, all the metrics, cash costs. So, we think it's a big step up from where we were in 2018. Obviously, it's a robust project at $1,400 gold and 275 copper. We're substantially above that now. And it's a team that really over the years has sold a lot of these type of projects, and frankly we're going to look to do it again and see if we can replicate our success. So now I will clumsily try to switch over to Luminex. And Marshall, why don't you talk about kind of the genesis of Luminex while I do that?
Yeah, no problem, Scott. So in 2018, or 2000, yeah, I guess it was 18, we had everything in Lumina Gold. And then we spun all of our assets that were not Cangrejos into Luminex. And those assets were gold and also copper assets. And in 2016 and 17, when they opened up the concession system, just because of our history with Lumina Copper, we acquired some really prospective copper assets that were early stage. And then our main project in Luminex is our Condor project, which we're in the process right now of doing a PEA on part of it, the epithermal gold area we'll talk about. And then we also have our Cascas copper project in there that we're in the process of drilling. We're mobilized to the site right now. So those two projects we're the operators on. And then we have JVs with BHP and Anglo and other copper projects. Our Tarkey project, where BHP is the operator, they have to spend $42 million over 6 years to earn 60%. And they can spend another additional $40 million, which would take you more or less to feasibility or a production decision to get to 70%. They're mobilizing in the field now. So currently, within the next couple of weeks, we'll have drills turning at both Cascas and at Tarkey for our copper projects. And then our largest land position, we have a JV with Anglo American at our Pegasus projects. Anglo's the operator. They can spend $57.3 million over 7 years to get to 60%, and then an additional 10% to go to 70 with a production decision. Now they're pretty advanced, and they had been looking at drilling late last year, but they're likely going to be out in the field sort of the end of this year and drilling. But we'll walk you through what those projects are. Between those two partners on these copper assets, between 2018 and 25, we're looking at sort of 100 million in work commitments. That doesn't dilute us in our share structure, but it gives us some pretty upside to some significant copper potential discoveries. So let's go on to the next one, Scott. Go ahead, Scott.
Yeah, so just the cap structure on this one, it's 91 million shares outstanding, trading around, call it between a 60 and $65 million market cap today. This cash is pretty dated, but we'd be in and around probably $5 million on the balance sheet right now. Haywood Securities is the only one who covers us with a buy rating at $1.80. Obviously, the shareholders have a lot of similarities given it was a spin out. Ross holds 19.9, and the Ecuadorian Entrepreneurial Group holds 15. Route 1 out of San Francisco holds 9.9, and the management and board's around 6.3. The management and board's added about probably about 400,000 shares in the market over the last month ahead of getting ready to drill at Cascas and BHP drilling at Tarkey. So we're pretty excited about what we're seeing, and frankly, when the stock got down into the low 60s there, it was just too cheap. So it was a time for us to add, and other people I think followed suit. If you look at the share price chart, that on a more recent up-to-date one, that is. So just talking about our projects specifically, most of our projects are on trend with Mirador and Fruta del Norte along the Peruvian border down there. So you can see our partnership with Tarkey is in the green box, and then Kimi, which we own 100% of. Then you've got the two mines that were just built, our Condor project, which is contiguous with Fruta del Norte, and then Orquídeas, our Cascas concession, which we'll be drilling shortly, and the other two being Lecanel and Tres Picachos. So that trend is the big focus for us. The Pegasus A and Pegasus B concessions are in the center of the country by Adventus's properties, and they're operating that. So, we're able to do most of our work out of our Condor camp and be efficient from that perspective. So, maybe just moving to Condor and, what had been done and what we've done since. When we acquired the project, it had about $40 million US spent on it. It had about 100,000 meters of drilling. We've drilled about 20,000 meters since then, and made a lot of progress. We've added about 1 million ounces in the last while with the discovery of the Camp deposit, which is an underground target around 3 grams per ton gold equivalent that I'll show you in a sec. So that's the main body of work that we've done since we've acquired it. So I'll just walk through the resources here, and then I'll let Marshall talk about what we're doing on the PEA. So you've got the northern epithermal area that's got about 2.6 million ounces, and then you've got Santa Barbara down here that's got about 2.6 million ounces. So the northern area, which is going to be the focus of the PEA, is going to be 3 open pits that are around 0.7 on the gold side, and the Camp deposit, which, as I mentioned, is about 3 grams per ton gold equivalent there. So maybe, Marshall, I'll just push ahead for you to the zoom in on the northern area to talk about the PEA.
Sure. So basically, Scott pointed to the Camp zone and then Los Cuyas. So what we're looking at in the PEA is we've done a fair amount of metallurgy on the Camp zone. We have roughly 1 million ounces equivalent in the Camp zone, and it's an underground target. It's very near surface, low development cost to get into it, and what we're looking at there is probably a 2,000 ton per day underground operation, and simultaneously we would start mining at the Los Cuyas deposit, open pit, and what we're looking at is scoping a project, maybe overall throughput sort of between 20 and 25,000 tons per day. And we have 3 open pits, Enma, Soledad, and Los Cuyas, that would go into that plan. And I think one thing that's really important to point out here is, we decided that rather than doing more drilling, and there's significant more exploration potential, that we would be best served to start to define an economic project, potentially economic project. And so that's why we're moving to the PEA. But along this trend here, there's the Prometador target, and then there's a target south of the Enma pit. Scott just circled both of those. So there's still significant exploration potential, and Prometador, we're getting access into the area, and likely after we complete the PEA, which is due in June, end of June, assuming that COVID doesn't slow us down, we'd likely go in and start to work on the Prometador and this Enma target to do additional drilling. And then also at the Camp zone, we haven't fully delineated the strike length or the depth on the Camp zone. We've got about 500 meters along strike and about 600 vertical that are going into this PEA. So there's still more exploration potential there as well.
So that's our gold focused asset. Now everything we'll talk about is really more primary copper focused. And, our view is that the gold asset more than supports our market cap currently, and we're not really getting any value for these earlier stage copper projects that are on the cusp of drilling. Just that's our view as management. So talking about Cascas first, so we own 100% of this. We started here working around a gold anomaly in the southwest area that we're calling Kuru here. And, there's historically been a lot of placer mining in this area. And since then, we defined, and through our continued work, about a 7-kilometer long trend that looks like a primary copper anomaly and a moly anomaly that are right on top of each other. And since then, we've also done ZTEM work over the area. So at the Shikai area, Creek 1, Creek 2, we're really seeing great outcropping mineralization. And before I go to the next slide and show you Creek 1, Creek 2, it's important to remember along this trend here, there's been lots of porphyry discoveries. Obviously, Mirador is a porphyry mine. We have a porphyry at Condor. SolGold's drilling Porvenir there. Solaris is being quite successful with Warintza. So, we're hoping that both at Tarqui and Cascas that we'll talk about here, we're going to see those style of deposits. So Marshall, maybe do you want to talk about some of the geology we're seeing there at that Creek 1 and Creek 2 area?
Yeah, we've done a fair amount of work, and we are mobilizing in to drill in this Creek 1 and 2 area as we speak. And what we're seeing there, both geologically on the surface, it looks like we have a supergene enrichment zone that shows secondary chalcocite and kovalite, which tend to be higher grade copper than just straight chalcopyrite. And we've confirmed this 7-kilometer trend that it looks like there's maybe a couple porphyry systems in there, but porphyry clusters, and really good potential. We've got a lot of outcrop that's plus 1% copper. And on the left here, you can kind of see the geophysics kind of maps up with our surface mapping. And we're really excited about this Shikai target. It's a real similar target to Tarqui. In other words, a lot of plus 1% copper and some of the work we've done. And it's never been drilled. So we know we have a porphyry system here, and hopefully we have a discovery that'll lead towards advancing a project successfully here.
So I won't spend too much time on the other ones. I'll talk about them briefly, but I know we're getting tight on time and we'd like to take some questions. So, the other one that will be hopefully getting drilled this month is Tarqui with the BHP partnership. They're going to be focused in on this discovery zone that you see in the northern half of the project. And similar to Cascas, we were seeing over 1% copper outcropping at surface there. So we're hopeful that BHP is successful when they begin drilling. And, there are going to be similar programs, probably both around 3,000 meters to start, and perform scout drilling where you drill, maybe around 400 meters deep over several holes to see if we're onto something there. And then the last thing I'll talk about quickly is the Anglo-American earn-in. They have spent $11 million to date here. It is drill ready, as Marshall said at the start. Most of the work is focused on this Pegasus A area. And, to give people an idea, it is truly a massive land package. Pegasus A is, probably 5 times bigger than all of our Cangrejos concessions. And Anglo has defined 8 different porphyry targets now with the work they're doing there. Medusa would be the one they focus on first when they remobilize to the field, but we're just waiting for them to do that.
Yeah, and I think one thing on that, Scott, it's about 20-some kilometers across those 8 anomalies, so it's a pretty major set of porphyry clusters. And this is the Medusa target. There's been a lot of geologic surface work done and geochemistry, and then also geophysics, and what we're showing here in magnetics and resistivity. You've got a pretty classic porphyry system, and this is the target that Anglo is planning on drilling first. It looks really good from all aspects.
Yeah, and not to skip over it, but I would say, since you guys heard us on Lumina, we do take a pretty similar approach in Luminex, obviously, to both the Condor and Cascas areas where we're the primary operator. And at Condor, we've been that camp has existed for over 30 years, and Cascas is a relatively new area, but we've made some good inroads there with the community and have had a pretty positive experience over the last year. So I guess just in summary, before we hand it over to questions, you've got a PEA that's underway at Condor that we expect to have at the end of June. On the gold side of things, we're on the cusp of drilling 2 copper projects this month that we're very excited about. So the news flow in the next quarter or 2 here should be very strong from the company. You've got management and Ross Beatty that own 26% of it, and we've been out buying in the market. So I'd encourage everyone to take the time to look at Luminex. And maybe with that, I'll pass it back to Red Cloud to pass along some of the questions.
Awesome. Thanks very much, Marshall. And thanks very much, Scott. That was a great presentation. We do have a few questions here. Marshall, you've already touched on the underground potential at Cangrejos. In terms of the polymetallic nature of both Cangrejos and as well as the portfolio of Luminex. Obviously, gold and copper can attract a little bit of a different investor base. Have you guys spent any time sort of focusing on the substantial copper endowment held within Cangrejos and in the Luminex projects, as opposed to just focusing on the gold? Or
so at Cangrejos, about 20% of the revenues in the mine plan are copper, and there is some other potential areas around there that you could bring more copper into the story. But right now, I think we have a pretty good mix between the gold and copper, and that makes it an attractive asset. Scott, do you have anything to add to that?
Yeah, I mean, on the Cangrejos side, I think it influences, who a potential buyer might be, somebody looking for more of that copper mix or taking a copper concentrate. So that's one thing to consider. On the Luminex side, I think we get asked frequently if we're going to look to spin out the copper assets. I think from our perspective, we want to see that there's a definite discovery and a definite deposit at either Tarqui, Cascas, or Pegasus A before we do that, so that we have a strong standalone company. But we would look at spinning and separating the Luminex portfolio a little bit further down the road. But we're close to drilling those, and we'll have a good sense of that later this year.
Okay, great, excellent, thank you. And just on the Lumina side with Cangrejos, I think you said it was about 7 kilometers from the nearest community. I know you touched on it in the Luminex and actually in the Luminex and the Luminex decks as well. Given the impact that sort of those mining operations can have on the communities, can you guys maybe just talk a little bit about how you go about engaging local communities, involving them in the project, and getting them getting that social license in country to develop those sizable assets?
Yeah, I mean, that's, as I mentioned, that's a cornerstone from the very beginning of us moving into an area and working in the area. And I think if you go back to the history of Cangrejos, Newmont was in there sort of in the early 2000s, and they do a really good job with the communities too. And we're in El Oro province, and it means the gold. And so there's been historic mining on a smaller scale, obviously, in the area. So and it's non-indigenous communities. It's more of a broader mix of population that more representative of Ecuador at large. So you've got an understanding of mining. You've got an agriculture area where it is poor, but it's not high Andean, super poor populations. But the communities do want work, and they do want open and transparent communication. We have quite a few community members that work for us, and we've been doing programs to help them in, health education. And we go into these communities, and we don't go in with a preset idea, this is what we're going to do for you. We work with them as partners, and, what do you guys need? What's what? And I think I mentioned it earlier, with the pandemic, they really needed medical assistance because there was limited government assisted in this remote area. And we were able to bring a lot of that. So, those sort of things build trust, and, you don't try to capitalize on that because of a crisis, but, it really helped bring us closer with the communities. And, community members can come up into the project area. And like I mentioned earlier, several of them work for us. So those kind of programs build trust. And, we've got tons of programs we could talk about if we had more time, but I think that kind of gets to your question.
Yeah, excellent, for sure. Absolutely, Marshall. And then just a question, in recent years, obviously Ecuador there's been a much more activity in Ecuador, just to put it mildly. If there's more development in Ecuador, do you guys have any views on the ability, like port capacity, or the strain on infrastructure to get concentrate or I guess even raw materials in and out, but and particularly concentrate out? Do you guys have a view on what the sort of future looks like for that, and whether or not the local infrastructure can support all of the development that's looking to be come online in the next several years?
Yeah, let me take that, Scott, and you can chime in. So, Ecuador, through the Correa government, there was quite a bit of infrastructure development. Like the road system is pretty good. We have at Cangrejos, we have paved roads within 9 kilometers or so of the site. And then Mirador, which we mentioned earlier, is on the eastern part of the country, and they're shipping concentrates all the way across the country to the port at Porto Boulevard. So they're trucking all the way across the country, and they're able to do that. Now, the port is in the status of expansion, and they're looking at putting in a sort of a mineral facility there that they can handle more capacity for exports of concentrate and all. And they have a pretty good port system, container system already, and then Port of Guayaquil to the north. So the infrastructure is pretty good. I mean, been pretty impressed with that. Scott, do you have anything to add?
Yeah, I mean, the only other thing I might mention, and I think we're a long way from there, but there was even talk of putting a refinery in Ecuador, given the cheap hydropower there, and not exporting the concentrate and capturing more of the value chain in Ecuador. So, if you're talking longer term, I think that was something that was, being evaluated as well.
Excellent.
Yeah, and I think along those lines, if you got Warrenza coming in, you got Mirador, you got something like Cangrejos and some of these other potential discoveries, then that may become more of a reality. But I think that the country has the capability to expand the infrastructure, even if that doesn't happen, to handle all of the port requirements.
Right. Excellent. Well, gentlemen, thank you so much. We are out of time for this for today, but Marshall and Scott, thank you so much for your time. It's great to have you at the conference, and it was a great presentation, and thanks very much.
Thanks.
Yeah, thanks to Red Cloud and all of your listeners, and we're around if people want to get a hold of us. Take care.
Excellent. Thank you so much, gentlemen.